traders, how are you guys doing? My name is Shaquan and I am the trading mentor at SLFX. So I wanted to come and talk to you guys about candlestick formations and the best way to read candlesticks. Now, let's talk about candlesticks for a second. What are they? I mean, you have hollow candlesticks, you have wrinkles, Japanese candlesticks, like whatever the case may be. All I'm going to say is, for me personally, I do like Japanese candlesticks. And sometimes I even like Hakanashi, but nothing is, it's all about your eyes, okay? I'm not going to say something is better than the other, because it's actually not. It just depends on the trader and what they see and how they see and what they feel comfortable with. Now, when it comes to candlesticks, it's nothing but price action. Basically, how is the market moving? That's basically all it is, okay? So even here on my chart, you guys see that I am on Euro USD, okay, the daily time frame. And to be honest with you, the time frame doesn't matter right now. What matters is what you see. I mean, because this can be any time frame. Like, if I had never told you, if you couldn't see at the top left-hand corner, you wouldn't know what time frame it was. You wouldn't know what the chart pair was. And to be honest with you, that all wouldn't even really matter. What would matter is, can you actually read price action? Do you understand what it is that you're looking at? For me personally, there are only 4 types of candlesticks, or even candlestick formations, if you want to call it, that I personally look at when I get into a trade. Now, here's what I'm not going to do. I am not about to sit here and show you a price chart or a chart of 20 different candlestick formations. I'm not going to do that. Here's why. I feel like it's not needed when it comes to trading. And the reason being is because, yes, these candles do pair up to make certain types of candle formations. Yes, they do have names, but if you know the leading candle and you let that 1 to 2 leading candles lead, you're fine. You don't need to know the full 3 candlesticks that make up a candle formation. It's not a triple five. What do they call it? Triple five. I can't even say it. I know what I'm trying to say. Can't even get it out. That's how much is not important. Okay. So anyway, when it comes to reading price action, you guys, here's the only candles that I personally look at. I look at 1, the hammer. That can be the hammer or the inverted hammer. All right. I also call these candles rejection candles, and we'll get into it more as we go. Now, I also look at the engulfing candles. And then I look at the doji and confirmation candles. So I'm going to say this: hammer, rejection candle, which those can be one and the same depending on price. That depends on market structure. The engulfing, and then doji plus confirmation candle. That is it. You learn how to let those candles lead. Guess what? A confirmation is going to come after. Right? So let's go ahead and get into it, because I can actually see it right here, right now. I'm going to make this quick, fast, and simple. Now, when it comes to understanding price action, here's the best tip I can always give you. Always wait for the candle to close, whether that's on the daily, 4-hour, 1 hour, 30-minute time frame, 15-minute time frame, 5-minute, whatsoever time frame you're looking to enter into a trade or you're analyzing. Always wait for that candle to close. You never base analysis or an entry or exit off of an open candle. The moment you do that, you are asking for trouble. How would you know how that candle is going to close? Or how do you know what that candle is going to do? Or how do you know what that candle is going to form unless it closes? You don't. So if you look at that candle in the first 5 minutes, like let's say it's an hour candle, and you watch it in the first 5 minutes or 30 minutes and base your judgment off of that open candle, and that candle closes opposite of what you thought, you can make a lot of mistakes doing that. So always wait for the candle to close. The biggest tip. Next, never look at candles just alone. Like, don't make a trading decision based off of one candle. Make sure it pairs itself with something, like some type of market structure. If you use indicators, maybe an indicator, just some form of market structure. Candles and market structure go hand in hand. That's all I use to trade, for me personally. Okay, they go hand in hand. All right, now let's go ahead and let's get into it. Okay, so when it comes to the open and close of candles, I know you see these videos that says, hey, this candle closes like this, this candle opens like this, and this is how it closes. Guys, the green candle closes on top, the red candle closes at the bottom. That's all you need to know. That's it. The green candle, I'm going to say it again, closes at the top. The red candle closes at the bottom. That is all. Okay, that's it. And then you base your decision off of the way the candle forms. So let's get into what these candles look like that I personally look at. For one, let's get into the hammer. Now, the hammer is a subjective candle, but it's a very telling candle, and I'm going to tell you why. You see this candle right here, 1, 2, 3. These are hammers. All right, this is a hammer. You see this candle right here? This is a hammer as well, but for me, I call these more rejections. All right, it just depends on the way you look at it. Okay, it just depends on the way you look at it. Now, you can say this is a hammer. You can say this is an inverted hammer because it's turned upside down. It just depends on how you look at it. All right. Now, I like to think of these as also screwdrivers because that's how it looks. But another way I like to look at these candles is Thor. The Marvel character Thor, you know, the thunder of God. Whenever he holds that candle up to the sky, lightning gets into it and it's like stopping power. It stops the enemy in its tracks. That's how I like to think about that candle. It has stopping power. So what this candle does is it stops price from pushing forward or pushing through. Okay, it just stops the momentum of price. That's how I like to look at that candle. All right, so that's the hammer. Whether it's up or down, it's gonna kind of push price in the opposite direction. All right, so here's an example. You see how price was pushing up, and then even right here we get this candle and it rolls over just a little bit. Although we're in an uptrend, this power proved that, hey, I need price to go down for just a little bit, right? And then you see we have these hammers here. Well, price is now saying, well, I know you're pushing down, 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 but then these hammers start to form, and then it says, okay, price needs to go the opposite direction. Now I need price to take off. So it stopped the momentum of sales and the buyers push back up into the market. Whenever I see a hammer, I know that, hey, eventually price is going to have some stopping momentum, and we may need to see price push up the opposite way. Okay, so always think about that whenever you're looking at that candle. All right, the next candle we're going to talk about is the rejection candle. Now, rejection candles to me, it's like with market structure when you pair it with market structure. So for example, if you're a trader who trades support and resistance and you do something like this, or if you do something, let's say like this, okay, this is just something generic, all right, for support and resistance. You see how you have this long wick and in the body right here, that is a doji, okay? Some people say that's a doji, and it is. But then you get this candle right here that rejects that same line. It's a rejection candle, in my opinion. You can also say it's a doji, or you can say it's an inverted hammer. Candles are very subjective to everybody's eyes. All I know is we're rejecting that top area and price has momentum that's about to go down. So rejection is a stopping power candle as well. If you look here, we have yet again another hammer, or to me, it's a rejection candle. Like I said, hammers and rejections, they kind of do look the same. Okay, what this is saying to me is this: we're rejecting at market structure, hence the word rejection candle. That's why I call it that. We have another hammer. Hey, we have some stopping power. The sellers were pushing down. The bulls came back in and pushed price right back up. So as you guys can see, my rejection candles, whenever I see them, I understand, okay, stopping power. We're rejecting a certain area of structure. So that's how I look at it, okay? So hammers and rejections, they kind of do look the same, and they also have the same power, okay, and the same definition behind them. Now, let's get into engulfing candles, where there is a bullish engulfing candle or a bearish engulfing candle. Now, engulfings are very, very, very subjective. And here's why I say that. Everyone looks at engulfing so differently. So I think about it like this: big fish eats little fish, okay? That means when the big fish eats a little fish, it eats the body and the fins. Nothing gets left over, not even a small piece of fin. Here's an example. Right here we have a bearish engulfing candle. Okay, so as you guys can see, the body is bigger than this body, and then the wicks are bigger than these wicks here. The full fish ate that fish. Now, in some people's eyes, this is a bearish engulfing candle, okay? Because this body is bigger than this body. This wick is engulfed by this candle, but we have a wick left over. So to me, an example where there's wick left over, that is not an engulfing candle in my opinion. However, that's why whenever I see an engulfing candle and I say it's subjective, because I know that there's another trader out there who may see it as an engulfing candle, and I'm fine with that. I'm okay with that because I understand that, hey, you know, in their eyes, that's what they see. I don't argue with what people see, okay, because that is what they see. So here's how I also see engulfing candles. I feel like it's like Beyonce. She stands out alone. She doesn't need a crowd. She doesn't need, you know, people beside her. She stands out alone. Whenever I see the engulfing candle, it's go time. Okay. So like I said again, though, it still depends on market structure and where price is paired with into. So always think about it like that as well. And then the last candle formation that I look at is a doji confirmation setup. So like I said, let's say that the trader sees this as a doji and they see this as a confirmation. Now let's talk about dojis for a quick second. To me, dojis are different variations of crosses. If I see a doji, the body can be in the middle, it could be at the top, it could be at the bottom. What stands out is the wick. It's indecisive. Like we have, this is a doji, this is a doji, this can be a doji, this is a doji. You can say that these are dojis as well. This is a doji here too. But whenever I see that next candle confirm where price is going to, then hey, doji plus confirmation is where I'm going to enter in at. For example, if I saw this as a doji confirmation and I don't enter off of dojis, but I enter off the confirmation candle, then when that confirmation candle closes, I am going to enter into the trade. See, you see how that works out? Doji plus confirmation. So that's all I look at, you guys. Whether it's by, if you have support and resistance here, whether it's by you use your trend lines, right? If you use a trend lines and you get a bearish engulfing candle that tells you to sell, whether you are using moving averages. I mean, it depends on what it is that you do as a trader. It really does depend. But please understand this. Use price action and market structure together. Don't just say, hey, I see a rejection candle, I want to enter. Well, you can't. Now here's the thing. Let me say that because that's subjective. Let me say this. You can. Actually, you can do this. But don't just use this alone. Make sure you have an exit. If you're going to enter, make sure you have an exit. I mean, and understand what type of trader you are. Are you a trend trader? Are you a counter trend trader? You can see this as a higher high, and you are a counter trend trader. So you may take it back down to wherever, I don't know. All right. You could be a trend trader. You can wait for price action to break the trend line and say you're going to continue down. You know, it's whatever the case may be. All right. But don't just look at the candle as an individual and say, I'm going to enter and exit just because. And here's another reason why. So let's use all the examples that I showed you guys. So let's say that we're trading in this area here. And you say, okay, I see a bullish candle right here. We have a bullish engulfing candle. Well, you need to understand where price is going to go to next. Do you have a resistance level up here? Is there demand or supply up here? Does your moving average or something, is it up there? Is it located up there? Like, where is your next exit? Are you using price levels? Are you using pivot points? Is it Fibonacci? Whatever the case may be, you have to have an exit point. Now, please understand this. Let's talk about an exit point for right now. Let's say you see this bullish engulfing candle, and then you start trading, and then you see this next red candle. Just because it's a red candle does not mean you should get out. And that is exactly why I say don't just use the candles as individuals. Don't look at them as just individuals, okay? Let's say you see a rejection candle here and you sell, but then you see this candle right here in this area, and then you get out because it's a green bullish candle. Well, it's bullish, but it's not anything important, okay? Don't just get out because you see the color green. Don't just get out because you just see a green candle, all right? Even if you were here, like, do you have an exit strategy for this? You say, okay, well, I'm going to enter in somewhere around here because it's a rejection, and then I'm going to get out because of another rejection candle. Don't cut your profits down or off because you just see certain candles. That's why you have to understand what type of trader you are and have an exit plan. What is your analyzing time frame? What is your entry time frame? What am I trying to conquer out of this market? Where's my take profit? Where's my stop loss? Already have those things set up, right? Especially if you trade from the higher time frame, such as I already have those things set up. And even if you analyze from the higher time frame, but you enter from a lower time frame, here's my thing too. I never enter, well, let me say it like this. I never exit a trade because of a candle, unless it's near a zone or near an area I trade and price forces me to get out because I have to change my bias. Let me put it that way. Here's an example. If I'm a trend follower trader, and I follow trend, and I see that price making higher highs and higher lows, and I get out, let's say I enter somewhere around here, maybe I'm using Fibonacci or whatever the case may be, and my take profit is set up to this area here. But I see this candle right here form. It's a rejection candle. Here's what I have to do whenever I'm trading. I have to ask myself, am I going to get out because I see a rejection candle? Am I going to? The question is no. And the reason being is because trend structure is not broken. I still have to, follow what I see. Because look what happens. Price pushes down. We get a rejection candle here or a hammer. And then price continues to push up and my take profit gets hit. So don't be afraid when you see certain candles. Don't do that no matter what time frame you see. Do not get out just because you see a certain candle formation that may look like it's going against you. Here's my philosophy. Either get stopped out or let the price hit your take profit. Let the market hit your take profit. Candles are meant to suck you out. But if you look at the candles as individuals, you'll forever be stopping your true potential and your profit. So don't do that, because you know what's going to happen when you see things like this and price turns around. You're going to say, oh man, I should have stayed in my trade. Like I said, no matter the time frame. So the best thing for you to do is, depending on the type of trader you are, just walk away whenever you put the trade in. Walk away. Now, some of you may be asking, well, Shaquan, why do you only look at those type of candlestick formations? Why do you only look at those patterns? Because here's the thing. If you ever look at the chart pattern, you see like the 20 different types of candlestick formations. You see like 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. You got the morning star, shooting star, evening star, kangaroo tail, the baby, and the inside bar, boom, 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 like all those kind of candlesticks, right? Well, here's my thing. The first candle is always a given. I know that. I know that. The second candle is always the leading candle. So if I know that, if I know that the second candle is the leading candle and the third candle is the confirmation, why would I even sit and look at the first candle? I know the candle is supposed to be bullish if it's going up. If it's bearish, I know the first candle is supposed to be red. I already know that. So that's why I teach candlestick formations the way I do. And I want traders to try to keep it as simple as possible. And yes, these candle formations, these individual candlesticks do make certain candlestick formations. That's what brings them up to make the candlestick formations. For example, you have tweezer tops right here. Cool, got tweezer tops, got it. They make other types of candlestick formations as well. But like I said, what is it paired with? Because if you're looking at this area here as support and resistance, we're cool. Well, now I can say, well, I know why price did what it did, right? If you say this is support, price broke through, pushed up, you got a rejection candle right here or an inverted hammer, you got a doji confirmation, cool, and then you get tweezer tops. Then you get a bearish engulfing candle. You see how that works out, how I just did that? I didn't think about the first candle. I let the next candle form. That's my leading candle. Leading candle. Leading candle. That is why I do that. And then if we could keep going over, and you guys will see those candlesticks or candle formations repeat over and over and over. The 4 that I just told you about. They repeat themselves over and over and over again in the market. Rejection candle, doji confirmation. Rejection candle, doji confirmation. Right? Or you could say doji hammer. See how that works out? It repeats itself. Doji confirmation, and then even a rejection candle. Or you could say it was a hammer. The same candles come up time and time again in the market. So that is why I teach the way I do and how I teach it. That's why I teach it. Anyway, I hope you guys really did like this video, and I hope that it brings some clarity to your trading, and I hope it makes it even more simple. If you want to learn more about how to use price action with market structure, click the link down below to join SLFX trading, or hey, subscribe to the channel, click the notification bell so that you can be involved and notified whenever content like this comes out. I mean, besides, it is free, right? So anyway, see you guys in the next video.